Hello, everyone, and welcome to our training today. Today, we're talking about how to get money for a new business. So look, when recessions happen, a lot of people start businesses, and a lot of people are looking for money to start those businesses. And today, we're going to talk about 8+ different kinds of funding options that can work for startup businesses. So by the end of this training, you're going to know at least 8 different ways that you can get money for your business if you're just getting your business started. And of course, all of these will work for you if you have an existing business as well. For those that don't know me, my name is Ty Crandall. I'm CEO at Credit Suite, and this is what we do at Credit Suite. We can help you get money for your business, and we do it by improving your fundability or fixing the things that make it where you're not able to get the money that you need. We're also able to help you build business credit for your EIN that's not linked to your personal social, and also help you do that without a personal credit check and guarantee, and help you access all forms of business capital in one place. So if we can help you, feel free to give us a ring. I'm going to have a link at the bottom of our slide, creditsuite.com/get funding, where you can get approved. You can also give us a call for a free consultation. We can give you an idea of all the money that you can qualify for now by giving us a ring at 877-600-2487. So let's start with the place not to go, which is the big banks. Look, a lot of us have relationships with our bankers. A lot of us have relationships with our banks. And so we think that that's one of the best places to go and start when we're actually really looking to get money for our business. But the reality is, big banks, if you think about it, they're government insured. So the requirements from the government mean they have to be very conservative with their risk. So they don't typically lend to businesses unless you've been in business for 2 or 3 years or more. And the reason they do that, or the actual way they do this, is by asking you for 3 years worth of tax returns. If you don't have 3 years worth of tax returns, you haven't been in business for 3 years. So most of these big banks, it's very difficult to get approved. You have to have collateral. You have to have good credit. You have to have established business credit. You have to have, you also have to have revenue consistently growing per your tax return. So not the place to start, especially if you're going to get a startup loan for your business. So what can you do? Well, fortunately, there's a lot of options, but the key is to play to your strengths. So we're going to talk about this a little bit today, but the best way I explain it is I call it the 3 C's: cash flow, credit, and collateral. It's one of those strengths that you have to rely on to get money for your business nowadays when you're dealing with alternative lending and you're trying to get money outside of the big banks. The big banks want all 3. They want you to have good credit. They want you to have collateral. They want you to have cash flow verifiable per your tax returns. But startups don't need all 3. You just need one of those 3. So the key here, as you're going to see with a lot of this financing today, is to focus on one of those strengths. If you don't have those strengths, that's okay. We're going to talk about several funding options that will work for you today, even if you have no strengths, including cash flow, credit, or collateral. And then outside of that, there's a lot of loans, a lot of credit lines that are available. A lot of them are through private investors. A lot of them are through alternative lenders. But again, as you're going to see, very few of them are from the big banks, and this allows you to get $100,000 in funding or even more. We're going to talk about single options today where you can get $150,000 in funding for a startup. So let's talk about SBA loans. Well, SBA set aside billions of dollars, hundreds of billions, to help businesses get through what's going on with COVID-19, and this doesn't seem to be anywhere it's going to stop anytime soon. But again, the money is limited. So when we look at CARES Act, when we look at the money that was made available for businesses, it is limited. So you want to get in while you can. But it gives you the ability to pay a lot of things: fixed debts, payroll, accounts payables, and other bills that you may have, with interest rates as low as 3.75%. Look, I'm still surprised at how many people don't know this. I had one of my coaching clients ask me about getting money the other day, and I said, have you tried an EIDL loan from SBA? And I said, what is that? I said, man, you should apply for this. I've got another one of my coaching clients that came in and, got $35,000 in an EIDL, even though he didn't need it, just to set aside in a bank account when he did need it. So there's a couple benefits you have here. And the reason I bring this up in a startup presentation is this: you can use this if you're an existing business. The Paycheck Protection Program, or the PPP program, the EIDL from SBA. But here's the interesting thing. You can also use these to buy a business. And that's what we're helping a lot of people do right now, is actually get the SBA loans for the business they want to buy, and then using some of the funds that they're using from those loans to actually help with the acquisition of that business. Don't get me wrong. If you're getting a PPP, if you're getting an EIDL loan, these funds are supposed to be used for other things, and they should be, because to get your PPP loan forgiven, they need to be. But here's the reality. If you are paying $50,000 a month in payroll and you get a $50,000 PPP loan, well, then you use the loan to pay your payroll, and now you have the $50,000 you didn't spend on payroll that you can use on other reasons. So a lot of people are tapping into these kind of loans to buy existing businesses. And Roland Frazier has a great program called the Epic Challenge. And Roland Frazier's Epic Challenge allows you an opportunity to learn everything you need to learn to buy businesses. And look, if you look at what happens in a recession, I mean, tremendous amounts of businesses become available for sale for very little money. You can buy businesses that are already cash flowing and use the cash flow they're making to pay for the business. Okay. And again, Roland teaches this on his Epic Challenge, but a lot of his students are coming in and creatively using EIDL and these kind of other loans available from SBA to actually help the business they're buying get the money, and then use the money that saves them to actually help with the acquisition of the business. So some creative thinking. Basically what I'm saying is, why start a business when you can buy an already existing cash flowing business? This is one option to be able to do so. So a lot of people coming in here. I just want to say hello. Kanisha, hello from YouTube. Lakisha, hello from YouTube. Knowledge Beyond Stars, awesome. Thanks for coming in. Max Powers, James Smith, Andre, thank you. Andre, thanks for coming in. And Keith says, do you need tax returns and P&L statements for EIDL? It depends on where you apply. You know, what we found with the EIDL and PPP is they all have different requirements wherever you apply. But yes, it is my strong suggestion that you have P&L statements and tax returns or business financials for EIDL, not needed as much with a lot of PPP sources. And Andre, thank you for the knowledge. And this is awesome information. Ashley coming in from Periscope. Thanks for tuning in. So SBA.gov/disaster/assistance. You can learn a little bit more about SBA's EIDL loan. So let's talk about the number one of the 8 we're going to dive into today, collateral-based loans. These are one of the best for startups because you're basically using collateral as your strength and the interest rates are low. When you're starting a business, we need to keep payments low, because you need some time to be generating revenue. Well, 5% interest is very low, and that's about as low as you're going to get when a startup loan, and you're able to get loans and credit lines. Your personal credit doesn't matter. You don't need any kind of cash flow. You just need some kind of existing collateral, inventory, account receivables, a 401k, stocks. We'll dive in and talk specifically about some of these options. But again, one of the best ways, remember, cash flow, credit, and collateral. Well, since you don't have cash flow because you're a startup business, this is when we rely on some collateral to actually help you get financing instead. And you can also ask a family or friend for these kind of assets as well. They may let you leverage an asset they own to be able to get money. So for example, maybe my dad has a 401k or stocks. Maybe my grandpa has a big backhoe that's worth money that he doesn't use anymore. Well, all those things can be pledged as collateral, and you can borrow against those to get the financing you need. Also, don't forget, you can also buy the things you need using what you're buying as collateral. So for example, inventory, equipment, purchase orders, these kind of things, you can get the money to get the purchase orders filled, or to buy the equipment, or to buy the inventory, or to buy the commercial real estate, or to buy the commercial vehicles. There's specific, or even signage that you put up on your building. You know, these kind of things are specific kind of financing you can get to be able to absorb and pay for those kind of things. So some other things to keep in mind as well. Also, don't forget securities-based financing. So this is where you're using stocks and bonds as collateral to get financing. Financing as little as 3 weeks, interest rates of 1.6 to 5%. Get a low interest rate credit line. Borrow as much as 90% of the value of those stocks and still earn the interest. So really cool way to get money from family and friends or yourself if you have those kind of stocks and bonds. Terry says, hello from YouTube. And Blessed Being says, thanks for the info. Thanks for coming in from YouTube. And Ashley says, what about those who are in network marketing? Do we qualify? Yes, you absolutely can. What's nice about what I've talked about with number 1 and number 2 here is that these don't actually have any kind of industry restrictions. It doesn't matter if you're in a high risk industry. It doesn't matter if you're for profit or nonprofit. If you have the asset, your credit doesn't matter. Your cash flow doesn't matter. Your profit, nonprofit status doesn't matter. It doesn't even matter, as I mentioned, how much money that you're bringing in, or if you're bringing any money business at all, or what industry you're in. You're still able to get both of these options, whether it be stocks and bonds that you're using as collateral, or again, if we look back here to number 1, you're also able to get a lot of other things using even inventory, account receivables, those type of things as well. Now, when I look at securities-based financing, it ties in really close with 401k financing. 401k financing is where you use an IRA or a 401k. You can borrow as much as 100% of whatever is not placed with your existing employer. Your existing employer, if your 401k is still with them, they may restrict your ability to use those funds for other reasons. But if it's not with an employer, then that's money that you're able to actually use to be able to get money for your business. This is the number 1 way that I see partners start businesses, where they both have to contribute money and they use their 401k to do so. Interest rates as low as 5%, loans and credit lines you're able to get. All you need is a 401k or IRA for yourself, or you can have somebody else that wants to pledge their 401k or IRA and you use that as collateral. So why do I say that? Because look, a lot of people right now, I'll use my mom and dad as an example. They're getting crushed in the stock market right now, right? They're older, they're retired. And like a lot of our parents, grandparents, they rely on what happens with the stock market to kind of determine their fate in retirement, right? Well, the stock market's getting crushed right now. So there's a lot of people that are looking for other places to put their money where they're getting a rate of return. This is why private peer-to-peer lending has become so popular, where people that are private individuals, personal people just like you and I, can invest in privately owned companies, because you can get a 5, 8, 10% rate of return on your money and investing something that's sometimes more stable than the stock market. Okay, the people in my circle know that if I'm going to go into an endeavor, I'm going to crush it in that endeavor at any cost. I will crush it in that endeavor. By any cost, I mean, of course, ethically, right? So if I come in and I go to people around me, they're going to want to back whatever I'm getting started with. And if I can tap into a 401k, stocks, bonds, IRAs, then they very well may be willing to pledge those. Let me use those as collateral, portion of those, to be able to get the money I need if I give them a rate of return or even equity ownership in the business. So some things to think about. Being an entrepreneur is being creative. These are some creative ways to tap into your assets or assets of somebody else. Now, with 401k financing, it's a little bit different than stocks and bonds. With stocks and bonds, you could just borrow against those, still earn the interest, and get as much as 90% of the value of the stocks and bonds. With this, you actually are basically getting rid of the investment into other businesses, which is what a 401k is. And you're basically creating a 401k for your business and basically just investing in your own company. That's how it is. It's and that's where you don't have to pay any tax. There's no tax ramifications here, because you're basically just rolling it over and you're investing it into your business instead of other people's business. And Chris says, hello from San Diego. Hello, thank you very much. And Bless says, can you use the grant money as collateral? You can't use physical cash as collateral for collateral-based financing. And the reason is you can get rid of the cash. You can't leverage cash or put a lien on the cash, but you can put a lien on an actual piece of equipment or inventory. You can put a lien on that. So you can't do that with cash, which is why that won't work for you. And Lehaya says, hello, if I join the program, how long does it take to get a loan through Credit Suite? Well, keep in mind, with our program, we help you improve your fundability to make it easier to get loans. And we help you build business credit. You can start to get vendor credit right away, get revolving store credit in about 60 days, and then get Visa card, MasterCard in about 6 months with our program. It could take you about 3 years to accomplish the same. Whether you get loans are based on cash flow, credit, and collateral. A lot of our clients that have one of those three and can qualify get money in as little as 2 days and as much as 3 weeks. Or SBA loans take a little bit longer. So it depends on what you have, cash flow, credit, and collateral, to determine when you can, how you can qualify and how easy you can get that money or how quick. So the Credit Line Hybrid, my number one favorite program. I talk about it in almost any kind of presentation I do with funding, because of all the funding I've ever looked at, I still think it's the best. And the reason is because you're getting 0% interest rates on it for up to 18 months. You don't need financials. You don't need tax returns. You don't need bank statements. You can get accounts or credit lines that report to the business credit reporting agencies, so you could build your business credit and become more fundable, as well as actually coming in and getting up to $150,000 in credit lines, which is cool. And you're also able to get about 5 to 8 times the amount that you get on your own, up to about $150,000. So easily 5 to 8 times the amount that you'll get on your own. And you get a bunch of credit lines. So you build a bunch of trade lines on your credit reports, a bunch of different credit lines. You can use 0%. You can take the cash out of those at 0%. Pretty awesome. And again, works really good for startups because it doesn't care about your industry and it doesn't have to look at financials or collateral. So as long as you have good credit, like a 680 FICO score or higher, you can get approved. You need 680, 700 FICO score higher from you or a guarantor. So again, I can use mom, dad, friend, investor, etc. And there's no impact on your personal credit with this kind of financing, depending on you. So the financing source will give you 2 options. They'll give you max funding, where you get standard cards that do report to the consumer credit reporting agencies, or you can get business cards that just report to the business reporting agencies. In our experience, people that use personal guarantors typically just get the business cards. And what that means is it means you get credit lines for up to 150 grand. Those report on your business credit report. So you build business credit and you're using the guarantor's credit to qualify. And the only way they get burned is if you burn them, right? Is if you don't pay the debt. Outside of that, they don't get harmed because the credit doesn't show on their credit report. It shows on your business credit report. So a really cool way to go. Now you can try this on your own and you can get unsecured credit cards with good personal credit, $10, $50, $150,000 by trying to get these approved on your own. Really tough right now post COVID-19. Bank of America, Chase, Wells Fargo, the main issuers of these cards have really tightened up. We're seeing the majority of people that are trying to self-apply get denied, and the people that get approved are the ones working with funding sources like our credit line hybrid, where you've got a back door into underwriters to help turn the denial into an approval, but something to consider here. Okay. So with these, if you have low inquiries, if you have, really good personal credit, you're able to get sometimes 0% for 6 to 18 months. You're able to get approved for, small credit cards, $5, $10, $15, $20,000. But usually, like I said, you're only going to get about a fifth or an eighth of the amount of money that you get on your own. So my advice is, if you're going to try to get any credit card for your business, really talk to us about credit line hybrid first, because you could burn yourself with that inquiry. An inquiry can cost you $25,000 in funding. You don't mess around with this. Like when I go to get actual credit cards for me personally or my business, I pay our funding sources to do it for me, because they get me the most cards, the most funding, the best 0% terms, the most points. They get me the exact cards that I want. And let's be honest, there are hundreds of credit cards to choose from. So it's tough when you do it on your own. Don't burn the inquiry. Look at credit line hybrid, but it is an option you could use. Now, another option you could use is established business credit. And then once you've done so, you can actually use your established business credit to get credit cards with about $10,000 to $50,000 limits. They report to the business credit reporting agencies. It takes about 6 months to build your credit profile to get to this point. But that's working with us. I don't want to mislead you. It's going to take you about 3 years if you're trying to build your own business credit to get to this point. If you're working with our program, we get people to the end of this process in about 6 months, where you're able to start getting cash credit cards, Visa card, MasterCard, American Express credit cards, and your personal credit's not pulled. You don't need a personal guarantee. You're establishing a business credit profile and score, and then using that to get high limit cash credit cards. By cash, I don't mean a cash credit line. I mean, get a Visa card, get a MasterCard. You can use anywhere. Use an American Express card. So 2 ways you could do this. You could use good personal credit, like I said, number 5, to go get credit cards on your own, or you could build your business credit and use that established business credit to go out and get credit cards on your own. So one, this way, doesn't require a personal guarantee and credit check. The other one does. So something to keep in mind there. And Andre says, I'm thinking about joining. I'd love to work with you, Andre. James says, can I use my home as collateral? Yes, you can actually. We've got actual business financing that will let you use the equity in your home to qualify for financing. So that's something you definitely could do. Bless says, how much money you need to build through vendor accounts? It's not how much money you need. Some vendors will want you to spend about $50 to $100. Some don't have any minimum requirement, but you might need $500 to buy stuff to be able to get those vendors to actually be able to use the vendors and have them report on your business credit reports. But remember, you should be using vendors for things you really need to buy anyways. You should be using vendors to buy the stuff you need to buy to build the business anyways. So it's not a matter of using money just to build business credit. It's a matter of using money and using it with vendors to buy stuff you really need to be able to build your business anyways. And Don says, well, credit bureau, they're looking after the 700 scores, all of them. They really want you to have good credit with all 3. If you have low credit with 1 or 2, you're not going to get very much funding, if any. So again, give us a ring and we'll talk to you more about what you can qualify for, but they do look at all 3 scores. Keith says, great info, thanks. And Lisa from Periscope says, hey, Ty, I heard Dun & Bradstreet number is changing. Can you talk about that? Well, give me some more insight into that, because the DUNS number really has been the same since DUNS number has been around before we even started consumer credit reporting. And it's still the same 9-digit number that it always has, used worldwide. So if you give me some more specifics about what you're inquiring into regarding the change, let me know. One change with the bureaus, though, is that it's harder to get Equifax. And Matt Listro was on our show last week and said the same thing. It's harder to get Equifax credit reports if you're not using a service like NAV, but not a lot of changes going on right now with the DUNS number. So let's dive into crowdfunding. Now, this is something you don't need good credit, you don't need collateral, and you don't need cash flow to qualify for. So you can do crowdfunding. You can also even do what's called equity crowdfunding. And this is very interesting. This has really become very, very popular now. And I don't think I've ever talked about it before, although I should. I've talked about it on my podcast before, the Business Credit Financing Show. It's worth checking out on iTunes. So there's 2 kinds of crowdfunding. There's crowdfunding where you say, hey, man, I have a really cool idea. It's unique. It's different. I'm going to put it on Kickstarter, and I'm going to go raise a bunch of money on Kickstarter. And if you're interested in that, check out our Facebook page, check out our YouTube channel. We've got a presentation just on how to get a crowdfunding campaign off the ground. But then there's also what's called equity crowdfunding. And equity crowdfunding is where you're giving and selling equity in your business, but instead of using angel investors and venture capitalists, you're actually using a crowdfunding platform to raise the money you need, to raise the actual capital that you need from a crowd of investors. So it's kind of like a new way of angel investing, basically. And you can check out crowdfunder.com and leverage their network for a few $100 a month, or or you can leverage your network for a few $100 a month, or their network for about $500 a month. And and Crowdfunder recommends finding a notable or lead investor, because other investors will likely follow that person. And this is what in angel investing is called affiliated and unaffiliated angels. So when we look at angel investing, there's two kinds of angel investing. There's what's called affiliated angel. So these are people we know. These are our family and our friends, etc. Then there's unaffiliated angels, people we don't know. So what Crowdfunder is saying is, hey, look, and this is the same way in angel investing. If you start with angels you know, it's easier for those people that don't know you to trust you, because people you do know are investing, right? If I go to get money with equity crowdfunding and nobody I know in my circle will give me money, that's a huge red flag. Because like I said, people that know me personally know I'm going to crush it if I take on an endeavor. So in the minute I even mention I'm doing something like this, they want to invest. And that's what they're looking for, is they look for people that already have people around them that are investing in you, because they know you're going to crush it. And then they see that other people are investing in you, they want to invest. They kind of roll with the crowd. So two different options here. Number 7, crowdfunding, great way to go. Your Kickstarter, your Indiegogo, if you have a unique product and service, but also equity crowdfunding, where you're able to use crowdfunding to raise money for your business, not by debt, not money that has to be paid back, but by exchanging equity or ownership in your business for the raise of money. It just makes angel investing a lot easier. So equity crowdfunding, really cool, something to check into, something a lot of people don't know about. So business credit, obviously great way to go, because again, it's going to help your company for years to come. It's the most valuable asset you'll have, because it really improves how fundable your business is. Yesterday, we talked about how PayPal loans actually pull your business credit. I pulled up a quote from PayPal that even says, as easy as their loans are to get, they still look at business credit to determine your approval. But look, I think business credit is the easiest way any startup can get money, because I can apply today if I know the steps and come in and start getting vendor credit right now, right today. Then the minute that credit reports in 30 to 60 days, I can start getting credit at Amazon. We talked about Amazon yesterday as well when we talked about e-commerce financing. So I can start getting Amazon. I can start getting Walmart, Sam's Club, Costco. I can start getting, Staples, Office Depot, Lowe's, Home Depot. I mean, you name a major retailer, even Nordstrom and Macy's offer corporate credit cards. I can get most of what I need to fund my business from those kind of cards. I don't need a personal guarantee. I don't have a personal credit check. I can get approved even as a startup. I can get approved even as a high-risk industry. I don't need collateral. I don't need cash flow. I don't need credit to qualify. I don't need a guarantor. I mean, like I said, you need cash flow, credit, or collateral to get almost all kinds of money. But I also told you I would give you some cool creative ways where if you have none, you can still get it. Well, we've talked about some crowdfunding, equity crowdfunding. We even threw in some angel investing. And now we're talking about business credit, all ways without cash flow, without credit, without collateral to get money. I mean, I just told you a handful or more of ways without any lendable strength in your business to still get money. That's kind of crazy. So a lot of different options available. You need to keep in mind, anybody can pull your business credit report. It's one of the reasons you want to build business credit. And it's really going to be needed to get credit lines and loans down the road. And with it, you're able to get high limit accounts really quickly without the guarantee, without the credit check. I found it's one of the fastest ways to get immediate funding if you don't have cash flow, credit, or collateral. Okay. So a lot of different things, and it opens up a lot of other funding options for you down the road. Won't get into the specifics of building business credit, but I will tell you that you need to get vendor credit first. Uline, Quill, Granger, Strategic Network Solutions. Buy stuff you're really going to use for the business. Well, first, make sure your fundability is in line. And you can access all kinds of fundability training on our Facebook and YouTube channels. Okay. And you can find those at facebook.com/credit suite or youtube.com/credit suite. And then once you have those accounts report, then you can start getting that retail store credit when you have about 5 of these accounts actually reporting. And then from there, you can move on to the retail fleet credit. 5 accounts reporting, you can start to get $2,500 to $10,000 limit credit cards at Dell and Sam's Club and Apple and almost every major retailer. So why does this matter? I mean, if we think about starting a business, I always recommend write down what you need to use money for and how much you think you're going to need. and then double it. By the way, it's one of my best things is it will cost you twice as much money as you think. It take twice as much time as you think for that business to be successful. That's what I found in my experience. So if I'm going to make a list, I'm going to say I need 10,000 for furniture. I need 5,000 for computers. I need 5,000 for office supplies. I need 5,000 for marketing, for example. Well, the reason you want to write that down is if I look at that equation, well, 10,000 in furniture, I can get at Staples, Office Depot, I can get it at Amazon, I can get it at Walmart, I can get it at IKEA, all offer corporate credit cards. I need 5,000 in computers. I could use HP, I could use Dell, I could use Apple, all offer corporate credit cards. Okay, now I need 5,000 in office supplies. Again, I'm back to Staples, I'm back to Office Depot, offering corporate credit cards, right? And then I need 5,000 for advertising. Well, I can't use corporate credit cards for that. I need a Visa. So I can get store credit and pay for 90% of what I need to get a business off the ground. And I can get it really quickly with business credit with no lendable strength, no collateral, no cash flow, no credit. It doesn't matter. I'm still able to get all the money I need within 60 days to get my business off the ground. Then in 6 months time, if you're using our system longer, if you're doing it on your own, you can get the Visa MasterCard that you could use for the marketing and the Facebook ads, et cetera. So you could really get 100% of what you need to get your business off the ground using business credit if you work through the system, and you're able to get it fairly quick if you don't have cash flow credit collateral. You're also able to get fleet credit to get fuel and vehicles, things like that. Not something for me because I don't have a fleet of vehicles, but if you run a transportation company, for example, this can make a big difference, okay? And AJ says, great info. You guys have affiliate program. We do. It's at creditsuite.com/affiliate. And just so you know, AJ, if you don't want to be a part of our program at affiliate, creditsuite.com/affiliate, we have a partner program where it's like a net branch that we set you up for without a hefty net branch fee. And if you want to learn more about that, give us a ring, 877-600-2487. Our number's on the bottom of the slides. And thanks, AJ, for tuning in from Facebook. Blessed Being from YouTube says, thank you. I'm going to sign up with you guys. I appreciate it. Look forward to working with you. Lisa says, I heard it's changing until December 2020 to a UEI. So I'm not exactly sure what you're asking about still, Lisa. I'm sorry, but I don't have any major changes to announce on the DUNS number. But whenever we have something concrete, I will make sure that we do a presentation specifically for that and let you know. And Ashley says, I'm just trying to start my own medical business outside of network marketing. I'm looking into Uline. Uline's a great place, a great vendor to be able to start with. And Dad says, do I need a DUNS number before doing anything? You need a DUNS number before applying for business credit. And that's all part of fundability. Too much to go over on fundability in today's presentation. So that being said, if you want to learn more about fundability, just go to YouTube, go to our Facebook page, and we give you the steps of building business credit. As a matter of fact, we have a great guide at creditsuite.com/live. creditsuite.com/live, and that maps out the exact steps to build business credit, including what you need to do to get your DUNS number as well. And then again, as I mentioned, you can get to Visa card, MasterCard, all that within about 6 months of building business credit with us. It'll take a couple years longer if you're doing it on your own, but you can get to that level by building business credit without the guarantee, without the credit check. So we've talked about 8 really cool ways to be able to get money as a startup, but I like throwing bonuses. I have a tendency to under-promise and over-deliver, as many of you know. So let's talk about grants. They generally do not have to be paid back. It's free money. For urban projects, you want to try HUD, Housing and Urban Development. For rural projects, you want to try USDA. Federal funding means less paper, or means paperwork. You have to do some paperwork to do these grants, but much easier money to get than loans in a lot of cases because you're not competing with a lot of people typically. Okay, but make sure that you fill that out completely. Make sure you have your proposal ready to go. But federal grants are a great way to go. Even easier to qualify are state and local grants. You can get those at grantwatch.com, a really little known about grant source that you can find state and local grants. You can also try your city. They're less restrictive than federal grants, especially the community grants work really well. And again, what I like about grants is the money doesn't have to be paid back. So federal grants, state and local grants. But here's the interesting thing. You really should also look into other kind of grants that are specific to your industry. So AngelPad, it's called AngelPad, has a great way to get money for a startup. There's another one called BeatSpring that works really good. These are contests and grants that they give out. So based on your industry, they may be industry specific grants you can qualify for as well. Now, AI funding or artificial intelligence funding, you can go to creditsuite.com/fundbox, FUNDBOX, to find a quick link to this. It's really one of my favorite new credit lines. So with this artificial intelligence or AI funding, they're basically not getting documentation. They're plugging into your bank account or your tax software like QuickBooks and directly doing the underwriting from there. So what I like about this is it's fast money. It's easy money because they're not looking through documents manually. You can get approved same day and fund next day. It's kind of insane. Like we have $100,000 credit line through this program that we got. Our initial approval and funding was 1 day. Like next day, we had access to our credit line. So super cool way to get money. Okay. All they're basically doing is plugging into your accounting software or QuickBooks type of software or your bank account, depending on the kind of financing you're going to look at. There's two main kinds of financing they do. Invoice financing. So if your customers pay you on terms, they will do that and look at your account receivables, your aged receivables in a place like QuickBooks to underwrite and approve you. The other is the cash flow type of credit line. And they're going to just look at how you manage your cash flow in your business bank account. They're going to plug into your bank account. You need about 6 months worth of history. I think you can get in with as little as 3 months, but I like to say 6 months. So if you have 3 to 6 months worth of banking history, they can plug into that and give you a credit line. It might not be big if you're not doing a lot of revenue. It might be a $1,000, $2,000, $3,000 credit line, but I still like it because if you then have tax returns or supply more information to them, they'll bump it up. And if you use it and you do well and you continue to supply more financial documents, they'll bump it up again. So we got approved for, I think, $6,000 initially. Then we supplied tax returns. They gave us 30. Then we used it and we paid it back and we asked them for more money and they gave us $100,000. And I have a lot of friends. I even have friends in credit repair, which is a high risk industry, that were able to do exactly the same thing and get $30,000 plus credit lines. You can go to fundbox.com or go to creditsuite.com/fundbox. And I have a special link for you there that will get approved. I love AI because AI just makes lending simple. It makes it faster and it makes it less cumbersome because there's less documentation. Let's also talk about Square. You can get loans through them without a personal credit check. Eligibility amounts depend on the sales you do through Square. And it's based on your business sale history, how long you've been with Square. Loans are from $500 to $100,000, and you can find them at squareup.com/capital. And let's also throw PayPal in here as well. PayPal and Square, one set fee. They don't really charge you interest. Sometimes you can get approved without a credit check. PayPal has a tendency now to do credit checks. And PayPal, I think you can get up to $500,000 depending on what you're processing through PayPal. So PayPal and Square, I love these, because they're some of the easiest ways you can get money. They really don't care as much about your credit. What they care about is just how your history is through your PayPal and Square account. And the reason for that is if they see that you're consistently doing business through them, they take the money, their payment right out of the deposits that you're getting from them every day or week. So they know that money's coming in because they have all this data that shows your history of processing with them. So it's your history, your processing history of PayPal and Square that helps you get approved way easier than getting approved on your own. And again, as I mentioned, PayPal, here's some more specifics: $5,000 to $500,000. Highest loan you're going to get is about 35% of your annual sales. Let me show you why these things are awesome. You can use merchant accounts to qualify. If you have credit cards that you process, you can get financing using those credit card transactions, but you can get about 11 to 12% of what you process in a year. With PayPal and Square, you can get up to 35% of what you process in a year with them advanced you in a loan. That's 3 times the amount that you get through normal merchant cash advance, and way easier money to get. But you need to have about a 6-9 month history with PayPal in order to be able to qualify. So conventional banks, not the place to go for startup funds. SBA, something to consider, especially if you're wanting to buy a business, but the money's not really fast. So you want to try maybe look at all the assets that you have that could serve as collateral. Look at that credit line hybrid program that we talked about as well. Try crowdfunding, multiple sources, right? We talked about regular crowdfunding like Kickstarter and Indiegogo, and we talked about equity crowdfunding as well that could work for you. Don't forget about grants, federal grants, state, community grants, industry grants as well, artificial intelligence funding. Then we talk about Square and PayPal, easier ways to get money as well. So a lot of different options that we've talked about. As you can see, like I said, I have a tendency to underpromise and overdeliver, way more than 8 here. And here's the cool thing. They all work for startups. Everything we talked about works for you, whether you're a startup or less than 6 months in business. We really refer to a startup as less than a year in business, but I showed you a lot of options. The majority of them work less than 6 months in business. So hopefully that will help you as well. So that being said, I'm going to go ahead and wrap this up. If you have any other questions, please let us know. 877-600-2487. Don't forget, if you got value from this, like this for me. Do me a favor. Give me a like, give me a love. I can see I've got the likes and loves come in real time. So I appreciate that. I pour my heart into getting good, valuable information from you and then delivering it. All I ask is that if you have value, please hit the share button, hit the like button. That helps Facebook and YouTube and Periscope recognize that this is good content, and it helps me get this information out to other people. So it really means a lot I don't see anybody else doing it yet. I can see all the people that are liking and loving. So please do that for me. And then if we can help you, give us a ring on a consultation with us. This is what happens. We actually will go through and do a fundability assessment to see how fundable your business is. Okay. We'll actually see how fundable your business is and see where you have discrepancies on your fundability. So for example, if your step doesn't match with your Secretary of State, then we're actually going to be able to pull that up and tell you that there's a discrepancy issue there as well. Okay, I'm actually looking here to see if I have something that might be able to help with that. Also, on top of that, we're also able to give you a free business credit report. So we do a free check to see if you're set up with the reporting agencies now. If you are not, if you are set up with them, then we'll even help you get a free copy of your business credit report as well. And then on top of that, we also will tell you how fundable your business is and even go through your business credit reports with you. So a lot of cool things that we're able to do to help you actually get money for your business. All you have to do is give us a ring, 877-600-2487. If you like this, again, please like and subscribe. And then also check us out. We have a podcast with over 300,000 downloads. It's popular. You can listen on the go. Daily tips on Twitter and Instagram. And we go live Tuesday and Thursday at 1 and 11 on Wednesday, all Eastern time on Periscope, YouTube, and Facebook. So you can tune in here as well. Thanks everybody for tuning in. I will see you Tuesday at 1 o'clock Eastern, where I give you more cool ways to be able to get access money for your business. Thanks everybody. I hope you have a